Welcome to the next episode of Zero to Funded, and today is a really important episode because I'm going to be breaking down the entry model that you're going to be using and also paired with A plus entry criteria. Now, if you watch the end of this video, which you should watch the whole thing because this video is going to be so valuable to you that if you don't watch it, it could ruin your trading, okay? Because I'm not going to give you like some discretion here and there. I'm literally going to give you everything you need to enter um, and the entry criteria checklist. So, you can factor out whether it's an A plus setup, a B setup, C setup, basically. So I'm going to give you all of that stuff in this video, and I'm going to show you some examples and all those good things. So make sure to like the video so it reaches more traders. I really want to help everyone out there, give them something very black and white. So the entry model is very simple. So all we're going to be looking for, and this is London session specific, but for New York, you can test this out for yourself. I don't personally trade it right now, but maybe in the future, who knows? So pretty much what I'm looking for is the Asian low. Let's say we are bullish in this case. Our daily bias is bullish. And if you don't know how to work out the daily bias, check out my previous or last two videos, something like that. I've gone through the whole daily bias mechanical strategy. So what are we looking for? The Asian low to get run right there at our London kill zone timing, which is, it could be early Frankfurt, which is 7 a.m., or it could be London open, which is 8 a.m. New York time. Sorry, London time, which is basically 2 and 3 a.m. New York time. So let's just write 2 a.m. there. So we're looking for a sweep at 2 a.m. Now, let's say 2 a.m. is all the way there, and we swept the Asian low, but when 2 a.m. kicks in, we are around here. Now, you might think that we're already starting to move up and taking out the Asian high or basically high time frame buy side liquidity, but I want you guys to see a sweep after 2 a.m. if at 2 a.m. we haven't swept anything. So if we come down straight and it's 2 a.m., that's fine because we've probably swept liquidity somewhere around there. But if it's doing something like this, you'll see many times. Sometimes it will go, I'll be honest with you. And it's annoying, but it is what it is. I'd rather be disciplined. But what you will see most of the time is after 2 a.m., you'll see a sweep, such as this. You'll see that sweep, and that is called the London sweep, and that is your first entry criteria. So make sure to note this down. You want to see a London sweep at or after 2 a.m. So now we've got that checklist done, that's ticked off. Then we want to see a break, a body close off the next or the most recent swing high. So in this case, it's right there. So we get a body close right there. We get our break in market structure right there. And as you guys know, the midnight opening price is very crucial. So right there, I'll make that the midnight OP. Yeah, there we go. So this is a clear buy model. Okay, we have a sweep, tick. Okay, we have a energetic reaction with displacement, tick. Now, there are different ways to enter, and I've gone through most of these on the channel already. You can enter from a breaker block, number one. That's one. And like I'm giving you the model, I'm giving you everything to check, but I can't trade for you. So you need to go and backtest this and see which one works out the most for you and which one you want to use, because sometimes the breaker will get hit and the fair value gap below won't get hit, all these different types of things. Personally, I go with the fair value gap, but I'll let you guys choose. The second thing we could go for is an order block, something like that. I'll try OB. Now the next thing we could go for is an inverse fair value gap, which is also an extra confluence. So if there's a fair value gap there on the way down, displacing down, and we break past that, then we have what we call an inverse fair value gap. And what you will see, sometimes we come and react off this as well. And then finally, the main one is a normal fair value gap. FVG. So these are pretty much the four ways you could enter the trade after this is broken. And remember, we want to see an energetic move up, breaking the swing high. We don't want to see some like little move trickling up and then wicking or something, the swing high. We want to see that large move showing that we've swept liquidity, taken out those orders, and then pushed up with energy. Okay, so this is the entry model in a nutshell, and the same thing is reversed if we're bearish. So it's just sweeping buy side and then getting that large move down. And if you look at all my trade breakdowns, you'll see the entry model working every single time. And by that, I don't mean winning every single time, but basically what it looks like in a real-time price action and winning trades, losing trades, everything like that. Now, Another thing which could increase your chances of having a winning trade is this sweep taps into an area of interest. Now, these areas of interest could be a higher time frame order block, such as that. We tap into that and get that strong reaction. And if it leaves a wick and gets that strong reaction, it's a very, very good sign that we are about to go up. Okay, but it doesn't have to happen. The second thing we could do is tap into a high time frame PD array, which is what everyone calls it. I'm just going to call it a high time frame POI to keep it simple. And this high time frame POI is basically maybe a high time frame demand in this case, because supply would be up there obviously, or it could be a high time frame fair value gap, or I'm just thinking what else could it be. I think pretty much that's it. Just keep it simple. A high time frame order block, maybe a high time frame liquidity level like a weekly high previously, or a daily high, something like that, and a fair value gap obviously. So what you will see is usually we react to like a hourly fair value gap, tap it, and then push up. We get our entry model, and we get a clean entry, taps into one of these, let's say the fair value gap, and then pushes up for a simple 1 to 2. And that is what we're going to be targeting. We're going to be targeting a simple 1 to 2 risk to reward ratio. This is the very, very basic strategy, and I want you guys to use this and see the results for yourself. But obviously you can target 1 to 3, 1 to 4, whatever, adjust your stops. That's all up to you in your refining process and tweaking your strategy. But I'm basically giving you the basics of it. Okay, so this is like a ground zero, level zero strategy, and I want you guys to take this and work it and make like a level 5 strategy. Okay, because everything in this zero to funded series is given to you, so now it's just up to you to implement this and see it for yourself. This is the London session entry model, so pretty much that's all we're looking for. I'm just going to list it out. So we need a London sweep, we need a power of 3, so basically Asian high or low taken. Then we need a break, I'll try break BOS, a break of structure with a body. This if we're buying, our entry needs to be below the midnight open, and if we're selling, it needs to be above the midnight opening price. And so that's pretty much all it is. And yeah, we need a fair value gap, obviously, FVG, to enter the trade. If there are many FVGs, I would say go for the one in the most discount or premium. So if we're buying, go for the one in the most discounted price, and if we're selling, go for the one in the most premium price. And basically all I mean by that is, let's say there's like all of these fair value gaps. If we take our fib, go for the one that's lowest. So in this case, it will be this, taps it, and then just shoots up. Now, in terms of, that's the entry model. In terms of entry criteria, I think that's pretty much the same thing, right? London sweep, yeah. And obviously, in terms of added confluence, as I said, if it taps into a previous level of liquidity or a fair value gap, that's why you guys should always look to the left on higher time frames. Look for that and look for a reaction of that as well. So that's the entry model. One more thing I would like to say actually is, yeah, enter on the 5 minute and the 4 minute. I found the most success with that. Anything lower, it gets really noisy, and you might see a perfect entry, and sometimes it might work sometimes, but most of the time actually it's very noisy and it will usually just take you out, and you don't want that. And 1 minute entries is very noisy basically, and it just affects your psychology. If it's 5 minute, it's a more high chance of it being an actual break of structure rather than like a fake out, as people call it. So pretty much that is it in a nutshell. Now I want you guys to combine everything I've taught in this series so far, and the series isn't over, by the way. We're gonna get like back testing stuff probably, then what else, some psychology, how to create a trading plan, everything. So by the end, you're gonna have every single thing you need to actually start. There's no more looking around for the holy grail and everything like that. You're gonna have everything in front of you, and it's just up to you to implement it, go and back test it, make your notes, forward test it, all of that stuff. But I've given you everything here. Let me know how you guys find this in your back testing, and I'll see you guys next week. Happy trading and stay safe.